Hey everybody, welcome back to the channel. We are going to be reacting to Tom Lee. You guys probably know him. He is more bullish on the market than most, giving his thoughts on the FAANG stocks. Now, the reason I wanted to react to this is because Tom Lee is someone who recently just did an interview the other day, I think on like Monday, and came out and basically said, look, I think I was a little bit too bullish on stocks. And the primary reason for which he said this was because of inflation. Inflation. The thing that was supposed to be transitory, the thing that was supposed to go away, has not gone away. Couple that with Shanghai lockdowns, more supply chain pressures. Basically, the argument he made was, I am correct on my macro analysis around we're supposed to be getting ready to go into a bull market. The problem is if inflation and supply chains continue to persist at the level at which they're persisting, it's really hard for him to get to the other side of where the rally actually happens because of the fact that there's so much inflation going on. So as a result of that, he's kind of like lessened his bull thesis and said, until inflation goes away, it's going to be really hard to be able to do this. Today, I wanted to get his thoughts on FAANG stocks. And the reason I want to do that is because we have FAANG earnings this week. Microsoft and Google, Microsoft not part of FAANG, but it probably should be. Microsoft was pretty good, beat top line. Google did pretty good, even though they missed, but like it was such a slight miss. It's like still such a phenomenal business. Facebook's the one today, and we're going to talk about Facebook in a different video, but Facebook is going to be reporting today. The question is, are FAANG stocks done? And I think that's an interesting question that I wanted to explore a little bit more. And we're going to have Tom Lee give us some of his thoughts. So let's get into this.
Tom, which has the bigger read-through to you, Microsoft or Alphabet? And welcome, by the way. Good morning.
Thanks. Good morning. I think both are important read-throughs because, both companies represent so much of what FAANG represents. Like you guys said, it's platform companies that really have a lot of exposure to a digital economy that's growing faster than the overall GDP, and that should be the case for the next 10 years. But, investors are finding them less shiny and attractive. That's one reason why we're seeing a sell-off in a name like Google. But as you guys mentioned, these have become so discounted that some of them will actually be included, we believe, in the value index in a rebalance. But more importantly, these are still going to be important EPS growers faster than the S&P, and they've underperformed now in the last 6 months by almost 10 percentage points, which is the worst since the dot-com bubble.
So this is a big point that Tom is making that I want to talk about. This idea that look, they're growing at exponential rates, but they're underperforming almost as if it's like a dot-com bubble type of thing in terms of how the performance of growth stocks are going. These are not the stocks of the world that you would think are super growth stocks. Like it's not Pets.com and it's not Robinhood. Or even Palantir for that matter, even though Palantir is growing like crazy, but obviously it's not respected by the community. Google is something that's respected at the end of the day, right? So at that point, it's much more harder for people to believe that this is like this real huge issue that exists within these FAANG stocks because they have real revenues, they have real products, they have real growth at the end of the day. And again, some of these stocks do have real growth, like a Palantir, but the problem is it's not respected. These are stocks that are respected. The question now is that respect turning into a peak maturity phase for these companies to the point where they're just not able to grow at the levels they were able to grow before? And I think that's where, where Tom Lee's going to ultimately give his thoughts on what he sees as genuine value.
So, we talk about FAANG a lot. Remember, the original FAANG was Facebook, Amazon, Netflix, Google, now Alphabet. 3 of the 4 so far have had some disappointing results, right? Alphabet, less disappointing, relatively speaking. But what does that say? And what do you think Amazon does in a season that so far, potentially 1 for 4?
Yeah, it highlights the risk reward is tough because especially in tech investing, there's that whole 3-quarter rule. When a company misses, it's pretty hard to buy for the next 2 quarters. So I think FAANG is in that penalty box. But for long-term investors, these are, in our view, pretty great entry points, especially because if on a macro basis, if people are worried about growth, these companies are still going to grow double digits. Maybe not as fast as people thought, but still grow double digits.
So, Tom, when you say that FAANG is acting like death, it's a little dramatic, right? Because they're not going to die anytime soon. These are strong businesses, but there is this divergence within the group. We'll call them mega caps, let's say. We've really seen, Netflix and Meta fall behind the rest of the crowd. So I wonder, where do you think the opportunity is here? Are they in a different category now, or do you think that there's actually value in these names?
I think there's genuine value because these companies generate so much free cash flow.
Tom is such a nice guy, bro. Like, this is like she's like, yo, do you think there's value? He's like, no, there's great companies, and I agree with him. It's just he's such a nice guy, bro. So he's gonna say there's genuine value. Let's hear his thoughts on why there's genuine value.
And they have pretty big moats, as you guys would say, around their businesses. R&D is a huge component of their actual operating expense, and that's really what helps them extend their lead. And as you guys talk about, like some of the new leading edge things like AI, they're going to be at the front of this. So I don't think there's a lack of future growth catalysts, but because they're widely owned and people are more interested in owning inflation plays like energy or even some defensives, that's what's made them harder to sort of say they'll be great in the next month. But as you know, investing isn't really about trying to make money every month, but it is about trying to find sort of the big swings. And I think we're at a point where it's a big swing to own FAANG.
So I think that's the other big point he's saying. Like, he's like, look, there is a moat. They are significant technologies, and they have massive user bases. So when he says investing is not about finding the best thing, it's about finding the thing that has the best swing. You look at something like Facebook on the screen at 177 or Netflix at 190. Now, I have been very bearish against Netflix. This is one of the stocks I've been right on in my life. It's so cool to actually be right on a bear thesis, and then the stock drops, not because you want the company to fail, but just because like there's just, it's unsustainable in terms of the valuation. Wow, that was a weird burp that just came out. It's because of this Gatorade. It's unsustainable of the valuation, or it's just not that good of a product as much people think that it is. So, I mean, that was my thesis on Netflix. Facebook, I bought at 320, sold at 216 after the drop. I was like, this is I should not, this is just dumb for me to hold it in the face of the macro and in the face of declining user growth potentially. But a swing is what's the conversation here. Facebook's at 177. I mean, like, it hasn't seen that since like years at that level. So the question becomes, okay, if you think Facebook can 1x or 2x as a result of being this low, because it's just so low that and the fundamentals are still there, that's when there's genuine value. But in terms of the FAANG stocks being the stocks of the next decade, I think the Teslas and Palantirs are going to take that over, to be honest.
So if the mega caps are in the gutter, what does that mean for some of those large but smaller tech names that are trying to make businesses and have made businesses in AI and automation, where FAANG plays, but they've obviously seen their stocks sell off hugely? Is there any opportunity in those second-tier names?
Yeah, those are going to be beta. I mean, the tech complex is derating right now, and I think it's also engulfing the venture and private world. So I think that's what's hitting a lot of hedge funds so hard, because there's a lot of marks coming. But as you know, ultimately, we're probably in a period of undershoot where investors' disappointment is now causing a derating that is the opportunity. But I don't know if we're, I don't know if this is going to turn here. But more importantly, it's, in 12 months, I just think these are all going to be great buys.
Yeah, and that's the point, right? At the end of the day, he thinks there's going to be great buys, primarily because of the fact that they're deeply undervalued. Now, let's talk about the stocks that I think are deeply undervalued in the FAANG stocks.
Sanjay, good to see you. So this is a lot.
The YouTube was still on. Why does YouTube still turn on? Let me turn you off, YouTube. You're not allowed to be on. Okay, let's go to Webull. So let's go to Webull right now. Let's go through the major FAANG stocks right now. Let's just kind of look at them. So let's go to Goog. This is the big boy. Let's go to its max chart. There's Google from 2004 or whatever. Now it's here. It was at 3,030. When was it at 3,030? It was at 3,030 actually February 28th, 2022. So not too long ago. And now it's down here to 2,300. Google I see as a massive opportunity, but I'm still being patient here. I want to get into Google. I really do, but I do think there could be a little bit more downside. And because of that little downside, I think we should wait a little bit more, just because of if something happens in the macro. But I think if you don't care if it's 2,100, 2,000, 2,200, Google is an amazing play, especially with the stock split that is coming up as well. So that's Google. Then let's go to Facebook. Facebook from its max, there we go. There it's up, 384, right? And then we see Facebook down to 175. Facebook is the scary one because as much as I love Facebook, the declining user growth, and I'll talk about this more in a deeper video, is the issue. We're expecting 3.7 billion MAUs this earnings from Facebook. Hopefully that happens. If that doesn't happen, then it's going to be a little bit of rough. Netflix, obviously, we know this one. This is the one I'm the most bearish on. I don't think they really have content. They don't have a moat because they have to keep buying content. They don't get user-generated content, so this one I just wouldn't touch. And then we've got, what's the other one? FAANG, Amazon, and Apple. I mean, Amazon's the interesting one. Amazon is having its stock split. That's where it got to 3,000. But as a result of, you see how flat Amazon was for a while, and then it finally drove up. The problem with Amazon is that there's just a question of just how much more growth they can have. The retail margins are not the most amazing. AWS is like $1 trillion business inside of Amazon, but there's increased competition. So the question is how much it can grow. I think in 5 years, 2,700 is a decent price, but we have to wait to see from 5 years from now if that actually happens. Again, long term, I kind of agree with Tom. All of these stocks, all these companies will still be around, even if there are other big companies that exist. And then Apple's the big one. You know, Apple, it's a question of just how many more iPhones can they put out and how much more do people care about phones, which is why this chart is just absolutely amazing, though. Look at this. To get to 3 trillion, that's why they're introducing this metaverse product thing. I don't know if the metaverse thing is going to come out or if it's going to be big or people are going to use it. So like that's the question mark with Apple. But again, 5 years from now, it's hard to kind of bet against Apple. So in the context of FAANG stocks, I would buy the one I have the most conviction on out of all 5. That would be Google. I think it's trading at 6 times price to sales, which is insane right now. But the question is, when do you want to buy it? Do you think there's a recession coming? Do you think it can have a little bit more headwinds from the macro? And do you have a 5-year, 10-year trajectory? Because if you do, you know, this is the tricky part. If you do have a 5-year trajectory, these companies should stay around because it's long term. But the problem is if they're at their peak growth phase, do they start coming in the decline like we're seeing on Facebook if it keeps having negative user growth? I think Google and search and YouTube is going to be around for a very long time, which is why I have no hesitation if I were to buy Google right now. But the other ones are a little bit, you know, we're going to see what happens over the next couple days or the next couple years. So thank you guys so much for watching. What do you think about FAANG stocks? Do you agree with Tom Lee? And ultimately, do you think that they are going to continue to grow or they have reached some level of maturity in terms of their ability to accelerate their businesses into new stratospheres and new worlds like they did from 2010 to 2020? It's a new decade. Companies come and companies go. Question is, will these companies be able to stay? And also, before you leave, recommend some knickknacks, some cool things I could put on the back of this at the end of the videos. I want them to be there the whole time. There's my scruffy teddy bear right now. I want there to be more of them. So if you recommend some stuff, that'd be pretty cool. I'm thinking of getting Tom Nash as a bobblehead. He mentioned that idea. I think that would be really cool if I could do that. All right. Thank you guys so much for watching. I'll see you guys in the next one.